What up and welcome to the coffee shop, everybody. This is your host and Baristo, and so you know where you are right now. You just finished off lesson number 3. This is lesson number 4 that I did with a group called Trade with Confidence. Links to the Discord are below. In today's video, we're going to do buying and selling pressure that the candles show you. Also, we're going to see how to find order blocks inside of your trends. Look at all this buying activity, all this buying pressure. And the guy in the video he's pointing at something on the candles, and he doesn't really tell you what he's pointing at. And it always blew my mind that he's like not describing it, because I think it's important, right? Look at the open of the candle, okay? Consider the open of the candle is what determines the strength of the move, right? So if you take a look at this one, the open of the candle only goes up to this far, gives you a high, and it's inside this range. That means there's no support here. This has no support, okay? This whole thing, that whole candle. The open of this candle breaks this one, closes up here, right? At the same as this. So you've got support here, right? Now the open of this candle closes above its own range, its own previous range, and its own previous high. So you've got more support here. So this is all buying pressure, right? Open of this candle breaks its own high, gives you a new high. Okay, great. Same thing happens over and over again. Buying pressure, right? Because it keeps breaking its own highs. Buying pressure. So you have buying pressure over and over again. All right? Now you get to this point and the open of this candle gets stuck inside this range. In my opinion, you still have buying pressure here. You still have that. And you can look deeper inside the candle and say, I have support here because I was able to break the previous. I have support here, however small it is, because I was able to break the previous. Support here, same thing, even though you can't see the wick, but it's there. And here, these are all your low time frame, right? This is your range. This is your buying range, essentially. Your buying order block, your current time frame support, right? This one here. Let's do this. These smaller ones, you can consider these lower time frame, okay? Lower time frame support levels. That's all they are. And if you drag one out, I don't know where it's going to go. Let's find out. You should have a small interruption at these levels, because you ended up having these prices, these opening prices were able to help close a candle, right? They will help to close a candle in a range, above its previous range. Like it just kept closing higher and higher. So you just look over there. So when price starts drawing down, if you can't find liquidity, you can find support at these levels. Right? Get down and you get a close below it. Okay. It's not exact. It's not perfect. It's fine. But you can see the interruption. Comes down, you get an interruption. Comes down, interruption. You can see it. You use them again like targets. It happens over and over again. Now, that makes sense when I see others draw them out. Thank you. Thanks, Bucky. So, but that was always one thing that always blew my mind. It's like they're saying here is buying pressure. I don't know if you want to call it a liquidity run or whatever the case may be. I think that terminology, like liquidity run, liquidity sweep, I think there's too much confusion in the education for that, for me to even try and say, okay, this is the difference between this and that. I don't want to try and get into that. It's complicated, okay? I would rather keep this as simplified as possible. Look at your candles, okay? Right? Just look at the individual candles and how did the candle form. It's the same as earlier when I said you have a low, a high, right? You come down, you break the previous high, you're breaking structure, you come down, you break the previous structure. What's happening here? It's the same thing, right? It's exactly the same thing. Here's your structure, you broke the structure. Here's the structure, you broke the structure. Where was the low before this? Down here. So you got a higher low, you broke the previous high. You got a higher low, you broke the previous high. You got a higher low, you broke the previous high. So you literally have this inside these candles. I can't draw it in there because it looks, it would look stupid, but you know what I'm saying, right? That's literally what you have going on here. It's the same thing. So when you're looking at price action, it's not about looking at price swings, only price swings. The price swings are the larger formations of these candles, the individual candles. It's the same thing. Okay, that's what I mean, or what other people mean when they say the market is fractal. This move is the same as these individual moves. Same thing. So what are we on to next? Let me see. Nope, that's the algo stuff. False high, false low. Okay, invalid higher high, invalid lower low. So I think I already covered the invalid higher high. It's when you get a close inside the previous range. Let me know if anybody has any trouble with that. Swings that create liquidity, where liquidity is left and what to do with it. Okay, we covered liquidity. How about finding order blocks inside the waves? How about that, right? That's always fun. I like doing that. And some people have a problem with order blocks. An order block indicator will not find you order blocks instantly. Your eyes will find you order blocks instantly, every single time, okay? Your eyes will find you order blocks instantly. Now, order blocks, you don't have to find all of them. And I'm going to simplify this for you. When your main trend, okay, is an uptrend, all right? If your main trend is an uptrend, what you want to find is the order block in the pullback, the downtrend. That's what you want to find. And it's found by a very simple reversal move, okay? It's very easy to find. I did a video on this. I know it's like a little clip in the video, but once I show you this, you're never going to unsee it, okay? So in an uptrend, we've got this normal move that takes place, right? And it would be great if the market moved as smooth as that. When it's moving up, it moves up. When it moves down with no interruptions. I think Bucky or John, I think the guys call this like the stutter step, okay? I don't know if anybody's actually described exactly what's happening here. So I'm just going to talk about the uptrend, all right, and how you find it. What do you do with this thing? If your market's moving in an uptrend, what you want to find is you have moves up and then down, moves up and then down, moves up and then down, right? What you're looking at is this pullback, okay? What you're looking for is the lower high. Now, it might be hard to like memorize that, okay? It might be hard to memorize that. Uptrend, you're looking for the lower high. Downtrend, you're looking for the higher low. I'll tell you why. In the move up, right? You get this, right? And this would be a perfect move up, okay? But if you hit an order block, that means the bulls are worried about the price falling too quickly. They want to start buying some more, okay? They know that the price is pulling against them, so they'll do this. In the pullback, right? In the pullback, you'll see this take place, right? And then it will break this previous low, keep moving down. It'll give you the rest of that wave, like it gives you this wave, and then the price will continue moving on. We're talking about looking backwards at the uptrend, right? And you're in an uptrend, you're looking backwards at the pullback. The reason I say this is because at some point, the market is going to start reversing, okay? At some point, the market is going to start reversing. So you want to find the order block, and you want to find out like, okay, I'm going to hit an order block. I need to retest this on the top, or I need to retest it on the bottom. The order block is literally this little, right? It's that. Now you can use an order block two different ways. If you're currently in an uptrend and you see an order block take place, right? You can use that with a trend line, right? You want to break back above two things. You want to cross that trend to the upside, and you want to get above this, right? You want to get above that. You can scalp to this. And I say scalp because you can scalp long. I have two kinds of trades. You can scalp long, or you can take continuation longs, right? So as your price starts moving up, right? You're here. It starts moving up. You break the trend line. Let me draw this in the right place. You see this little, order block take place. You found the higher low. I'm going to show you on the price action in just a second. You break the trend line. So now you can scalp to this point and wait. Now you still have this zone to cover. you can scalp to this point because that's your previous high. Personally, I wait for price to cover this zone and give me a bullish formation above it. Okay, a bullish formation is like this. You can have a bearish candle with a bullish formation, and there's one here. This is a bearish. I'm sorry, no, that's not it. You guys are about to be masters at this game because that was lesson number 4, and moving on is lesson number 5. Thanks for watching this, and do not miss the next one. They just keep getting better. Peace.